The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this Monday, November 13th, and thanks to our great hosts. Let's keep that standard up. Dow's up 19 at 23,442. S&P's up 2 at 2584. Slight divergence there. The comp index is up 4 at 6,755. And the E-mini that you're looking at right now is up 3. And you can see that it made a high to peak D in the E-mini, S&P E-mini December contract at 2594.50, pulling back. But basically now I can do this. It's either in a, right here, a rectangle formation that says, yep, you could go higher, but you should be coming back to test the lower levels very soon. I'm just trying to draw it in freehand. Here we go. There it is. Okay. So this could become an H pattern. What I am impressed with is that on Thursday, the S&P slumped down to 2,563. That's a over 280-point down move to the downside from high to low. And the E-mini, 2594 to 2563, 30 points. That's pretty big. And then it closes quite nicely above the 9-period moving average. Next day comes down and closes right on the 9-period exponential, well, just a little under the 9-period moving average. Then today, the S&P slides all the way down to 2570.25, and it's trading now 12 points higher. That's very good action. So the real thing for me, and what I said to subscribers to my opening call, is the real test is what happens with this candle. This candle with the doji, a long-legged doji from last week, has, if there's a close this week above 2594.50, that is really good action. If there is a close below 2563.25, the low of last week, that is very poor action. No, I shouldn't say very poor action, because the weekly chart and the weekly technicals are still very good. That would hint that the daily chart is going to accelerate lower. That's really what it does. 120-minute chart, where I said to subscribers this morning, based on my weekend analysis of all the different charts that I sent, so many charts, the Dow was making a lowercase h to a lowercase m formation, and then I said to subscribers that the E-mini could very well do the same sort of thing this morning. Start an H that goes to a lowercase m. That makes the high of 2585.75, the high of 2 o'clock on the 10th. Really important, because if it takes that out, it could actually go a little higher. And if it slides at this moment on a short-term basis to below 25.79, it says, all right, now be careful. We should be pulling back. But at this particular stage, having no real news. And one of the things about last week is we start to see that there could be a gray cloud cover. But the events overseas, I think, are going to be interpreted kind of more benign, maybe not unpositive or negative, but just kind of that's what it is. And that changes the scenario a little bit, because if there was any hint of some kind of conflagration anywhere, that wouldn't have given any support to the market. Now we've got some kind of a cover, because that dark cloud is partly sunny, partly cloudy, and that's really what you're looking at right now. So let's look at the QQQ, because this is an index that I said over the weekend to subscribers. This is holding very well. Held the 9-period exponential moving average. We'd have nothing but 1, 2, 3, 4. Even Thursday turned into a green candle, 5, 6, 7. So 7 green candles so far. Walking the 9-period moving average of 153 support. Weekly chart looks good technically. There's that same kind of candle as last week in the S&P. This one is just a little more positive. and the 120-minute chart is in a leg C. So I'll give you parameters to look for. 164.20s, pushing above that. I have to admit there's a chance to make a new all-time high in the QQQs. Later on today, a slide that takes you back to 153.40s says, uh-oh, that 153.14 level on the 9-period moving average could well be tested. IWM, now this is going to be very interesting. Nice candle today. The MACD is still very negative, but the stochastics attempting to rally at 25%. Did not take out the low of Thursday. That was at 145.28. Today's low is 145.50. So far, that's it's a good stance. Weekly chart is not acting too well. Monthly chart, it's got a peak E, and the 120-minute chart says, whoa, until you get to 147.30s, this is just a mere bounce. Let's go to the to gold. If you're looking at gold, up $4 at 12.78, that turned down on Friday. Remember, I said that we had a number of long positions. We started putting in short positions, but we did add the GDX. It was like, technically, it did enough for me to say, you know, it could go to a leg D, but I kept wondering about it and saying, we're going to just have a small long position of the GDX, which is the gold stock index gold miners ETF. So the miners very often have a mind of their own, and they are doing something a little different to gold, even though the general trend is usually in the same direction. And in this particular instance, gold is had a high of 1289.5 on the 9th, slumped down on Friday, the 10th, to 1273.6, and now it's at 1278.4. I'm still considering that this is just chop, chop, chop in a trading band. And the weekly chart says, you know, there's a real good chance that it's going to go lower and it's going to test the 1260 level again. Silver, same sort of thing. Silver, in fact, has had a higher level consolidation. Still kind of weak. On the day, it's up 13 cents at 1701. But the weekly chart technically it says maybe you could bounce, but you'd have to bounce to 17.50 to really get silver activated to the upside. I think it's just chop, chop, chop. If you look at the dollar index, up 18 cents today, stuck in a range, making lower lows and lower highs. On the daily, the weekly chart is still looking very good. So parameters to watch: 94 is key support in the dollar as short term, and on the upside at 94.56 right now, it needs to get to the 94. I'd say 94.70s, preferably within a day or two. I mentioned to subscribers the other day that the let's see, it was. Oh, this morning, I mentioned that the RTH, the retail index, has had a really good run. And my thinking here is that the whole talk about goodbye to the bricks and mortar stores might be a little premature, but it might not be premature in some cases. But I think that there are enough retailers that are doing very well. Let's see, how can I put it? The chart is saying the market vectors retail, which has Walmart, Home Depot, Amazon, CVS, Lowe's, Costco, McKesson, TGT, Target, TJX, TJ Maxx, and so on. Just, you know, a plethora of names that we all recognize. It says, you know what, I'm doing okay right here. I'll be right back. Basil Chapman, Tiger Ignitions Hour. We're looking
It's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. So the RTH trading at 83.85, up 39 cents. That's the market Ventures retail ETF, doing very nicely. The XRT, which has just a smaller group and a different group, not looking good at all. That's the Spiders S&P retail. It's Groupon, GPS's Gap, I think. It's SHLD. It's got Sears Holdings. Burlington Coat Company, I believe. So yeah, it's not doing that well. So let me continue here. I just want to show you that the high-grade copper had a real nice spike today, but still within a trading band. And the weekly chart says, chop, 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 must hold $3.05. That's kind of the support. Could hit 315, 317, but probably just sideways chop, chop, chop. And we've got crude oil, a lot of chopping over here. Crude oil is just up 11 cents, and it's trading since its peak E 4 days ago. It's just been holding the 9-period moving average, going sideways, no big deal. And the weekly chart is having a high-level consolidation. So what's the commodity index doing? CRTTI. TRCCI, you got to get your letters right, Mr. TRC, I believe. Yeah, that's the same as crude oil, high-level consolidation. So the commodity index, and this is the Thomson Reuters equal weighted, I believe. Commodity index, commodity index is trading at 423.56, up 20 cents, just stuck in a trading band between the 425 level and 421 for at least for now. Those are the parameters I'd be expecting. So what am I missing? I'm missing the TLT. Now, one of the things that my contention has been that yields should come down, bonds should rally if money is going to flow out of equities into the so-called safety of bonds. But it won't do that until, I don't think it's going to do that until the Dow, which is at 23,442, really starts to break 23,350 and then keeps going down. Then I think you'll see it. So maybe right now we'll just think of it as a trading band. And our final thing I want you to look at is TNX.X, which is the 10-year. There it is. A nice little bounce up like the TLT, and then it sort of stalled. But it isn't a B, a gray B in the weekly chart. We'll see. After all these decades, 30 years of a bear market in yields, a bull market in bonds, is it even possible to think that yields could go lower again and bonds could go up? I think it has to do with, at this particular point, I think it has to do with money flowing from the volatility of equities, which we haven't seen yet, but I think we're about to see, going into some stability in bonds, and that's one of the only reasons. Okay, now, I said that we would also look at different indexes. So the SMH is having a nice, well, not really a big move, but it's up 27 cents at 103.13. We're still short from that opening on Thursday. I don't want to know if I want to mess around too much with this, but the MACD turned down, stochastics pulling back. Everything about this says that it should be very close to some kind of a pullback. It doesn't have to be very deep, but if it takes that 101, 101.12 was the low of Thursday. If it closes under 101, then I think you can be looking at the 99 to the 98.67 level, which is the 9-period exponential moving average in the weekly. That's the support. And then we'll deal with it. But that would be, at least for now, would be the first level of escape for a failure of the bulls to be able to maintain this. And that's where I think you'll start to see some support come in. The XLF, now I've got to the questions that I've been sent, and in the den, XLF is trading up 1. Oh, somebody must be there. Hello, somebody there? Hello? I don't quite have my thing with my engineer, but I'm sure they'll send me something in the den to say I've got a caller. I thought I heard a caller, no caller. So XLF trading at 26.09, up a penny. Now, this is going to be very important because it made a peak F in the daily, Chapman wave methodology, peak E in the weekly chart, and a leg E in the monthly. So as it stands right now, the support on the 9-period moving average in the weekly chart has been taken out. Now it's being tested. The MACD is turning down, but the stochastic is still at 88%. I'm going to just make it real simple. I've been asked about Goldman Sachs and other stocks like that. I don't think this is quite the time. Right at this moment, I think that there's a little choppiness more to the downside in the financials, especially if I'm correct that if the market pulls back, bonds will rally. That's kind of a domino thing that I'm looking at. So the technicals in the XLF are still weak. Very good action today. Not good enough. It has to go above 26.34, the 9-period moving average, to really impress me. But it's a nice start. So the question is Goldman Sachs. Goldman Sachs is kind of doing the same thing. It looks to me like the financials at this particular point might need to do a little testing. Some of them have a very big move to the upside. So at 239.33 down 82 cents. I wouldn't be surprised if the candle of the 15th, is it? 17th, at 235.19, about 4 points lower. That's going to be the big test for Goldman Sachs on a shorter term basis. But if it takes it out, that could mean intermediate term. So I'm not seeing my IMs, no. Did I not see? Maybe I didn't get any. No, I'm not. So if you want to just thank you, either John Al. Yes. So if I can see them now in the den, just the question: are you seeing your IMs? No, I'm not. I just haven't even got my update on the Yahoo. I don't know what it is with that. Sometimes it works, and sometimes it just gives me a hard time. All right. So we're looking. So if there is a caller, just you put it in the den. Most importantly, right now, the financials are looking as if we have to wait, I think, for the next big move in the financials. We're getting there. I don't think it's ready, but they've had a fabulous move up until now. I just think that they need more time, and it should be sometime maybe in December, maybe end of November, beginning December, we'll have a better clue as to are they going to lead. But then that might mean that yields are going to go back up. So this right now we're in a complex area. We've had huge moves in the semiconductor, huge moves in the XLK, trading right now up a little bit, not unchanged. At 63.50 made a peak G/C. This is the S&P Spider Fund. And look at that. The dojis in these charts are going to be very serious if we take out the lows of last week's candles to the downside this week. That's going to be important. Now, I need to do this. I need to just check out. Yeah, so question about GE. You know, I keep getting the question, and I keep saying to myself, am I going to miss some kind of a low in GE? Let me tell you something. There will be an opportunity in GE. Let's just say today's news was perceived as being, let me be polite, perceived as being the start of a new phase. All right, let me just put it that way. Then, if it was up sharply instead of down $1.25 or 19.25, I would say to you, you know what? Yeah, a lot of words. It probably has to do more testing when the real thing comes about over a period of 6 weeks or more, maybe really 6 months, but I'm saying 6 weeks. But either, and now it's down $1.26. Just wait on GE. You'll have an opportunity, even if it bounces.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Well, folks, we're back, and let's see. So we've got, as I say, General Electric down $1.38. Not good action at all. Even if it has a bounce, my suspicion is that the bounce is going to have to do a lot of retesting. At some point, they probably will turn around. But boy, this is not good action. I'm impressed with the market. GE is down so sharply, and the Dow's up 15, even though we're actually short the Dow, but still okay, but short. We'll watch it closely. Now, a couple of things that I had a question about. One was the OI. Did I do the OIH? I think that's the one that I do. Yes. So the OIH had a very sharp decline to 20.40. Once it was above the 50s back in 2014, it slumps as a bounce up to the 200-period moving average in the monthly, around about the 35s. Pulls back to 22, I think it was, maybe 21, yeah, 21.70, and it's trading right now 25.30 monthly chart. Now, why am I looking at it and saying I just did this chart? Did I do it on the USO? No, I did it on. Oh man. All right, I'll go back to this. I did it last night. I know that. Oh, I did it on crude oil. Did I? CL. Nope. Oh my, I remember this chart so well. I just did it. I did that inverted, what was it though? All right, doesn't matter. So 25.31 on the OIH, the market vectors oil service ETF, had a very strong move from the 23 level. So it made a peak G doji back in around about the 28th of September at 26.27 doji candle. Pulls back, goes to another doji low, this time on the 26th of October at 22.99, goes to peak A, gray A, and a gray B. I'll have to just double check this because my thinking is that it actually went higher. If it did, this is a blue. So here we are. So the high of 26.15, double top, 26.15 on the 7th of November, 26.15 on the 9th. And what was the high there? It was lower, 27. Okay, there it is. So we're under, so this is still a gray B. So there could be a failure pattern. But what I'm looking at is the MACD and stochastic are pretty strong. So there's a chance that 200-period moving average, having gotten so close, instead of being repelled from it, will be a magnet, and 26.22s will become like an attractor, trying to get the price there. But all I can say is at 25.33, if there is a pullback under 24.90, the low of the 6, it's a be careful. It did not make a new recovery high, and therefore it could just keep chopping around in a trading band. What was the exact question? The question was, please show what leg down in the Chapman wave. Yeah, so down, this is just a leg A. In this particular, you wanted to know about that. So let me see. This is trough A, trough B, trough C, trough D, trough E, and now it's rallying. And because of the MACD and stochastic, I could turn out to be wrong, but I'm putting an up arrow. This says it's in a buy mode, and there should be a push to the upside. At this point, I don't think I'd be wanting to short the oil vectors, oil services. I think there's going to be slight pops to the upside. It doesn't have to go much higher, but I think it will make a C and then a D in the daily chart. Okay, I hope that helped you. And now I want to go to the next question, which is IYR. We did this on Friday, the REITs. This is the iShares Dow Jones US RE. That's the REITs Index Trust. Just gone to a leg D. What is the question? The question is wave count. Yeah, leg D in the daily. It wasn't a buy mode. We were looking at it the other day. In fact, I'm a little upset that I didn't jump on because I did recognize it, but I just very slow. Should have done that, didn't do it. It's in leg C in the weekly, or G/C, I think it's a C, and E in the monthly. This is, in all the years that I've been doing this, this is one of the few times I've ever seen in a monthly chart a single leg straight up that goes, in this case, from the 66 level to almost 86, straight up. One leg goes to an F, pulls back very sharply, back down to 72, 86 to 72. That is 14 points. That's a big move. And then it starts an A, then a B, then a C, then a D, and then an E. And each time there's been like 1 month or 2 months in between before it's gone to the next peak. That is such an unusual chart. And then not having broken to a new all-time high. So this is saying to me, be a little careful here, because there's enough evidence to say that the amount of momentum that was needed to get to this point might need a little bit of a breather. I'm saying a little bit of a breather because at 82.75, 81.26 is the 9-period moving average weekly support. It'll look terrible, but it'll only be a point and a half. So I'm thinking that we're getting close to some kind of a pullback, but the charts themselves still looking very good. Could the monthly leg F in IRL become a peak A? No, it would be, a peak A, sure. Yes, it would be an instant restart. And this is exactly the area that you'd get it in below the major candle high. If it's going to do that, you'll say, I need to go to the all-time high. And that was the highs of 80 July of 2060, and then 85.79. This is a Chapman Wave 2-bar reversal. I remember writing this in a long time ago. I must have lost it. Yeah. So as it stands, the MACD is just trying to turn up. That'll be a positive. And stochastic has turned up, but it's only at 65%. So I'll make it real clear. Today's Monday. I'm going to give it until Wednesday, so I'm giving it until just before Thanksgiving. If the IYR is able to get to 83.50s and hold there for 2 days, I have to think that this is going to be leg C with this a D still to come in the weekly chart, and very positive, both for the weekly and the monthly. All right. So now the final question that I got out of this quick list that I saw is, where was it? This is a very interesting one. So we got Bob had CLR. I don't remember if I actually spoke about it. CLR, and CLR is Continental Resources. He sent me an email. He had options, call options, and it took a real nice profit, kept some. I just don't remember what else he did with it. And that's a B and that's a C. It's still only in C. Look at the weekly chart. A, B, not an N. A B, think after all this time I'd be able to type correctly. A D. Yeah, look at that. Weekly chart leg D. Monthly chart had a huge single leg A, and now it's had a little gray A underneath it. This weekly chart is very positive. So Bob, I'm still holding half of my S&P. November calls, 39 calls, 39 calls. Well, bravo, congratulations. It's trading at 46.17, down 52 cents. CLR, Continental Resources Inc. Good eye, really good move. You must have made a triple on that at least. Very good. And it's only in C. It should be going higher. Basil Chapman, Tiger Technicians Hour. I'll be right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento and John Jameson are teaming up for a live hour-long webinar Wednesday, November 15th at 5:30 p.m. Eastern Time titled The Hidden Secrets Behind Trading and Investing in Cryptocurrencies. Cryptocurrencies are some of the most volatile trading markets in the world right now, and this is a webinar that you will not want to miss. In this live 60-minute webinar, John and Larry will discuss a variety of topics, including where cryptocurrencies trade and how to get started, how to recognize supply and demand in cryptocurrencies, and the difference between Bitcoin and Ethereum, and why knowing this one piece of information puts you in the top 1% of cryptocurrency traders, as well as many more topics. Visit the front page of TFNN.com for all the information and to sign up today for Fibonacci 24/7, and we'll see you Wednesday, November 15th for the hidden secrets behind trading and investing in cryptocurrencies. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks. So I was asked about WTW Weight Watchers. Let me spell that correctly, did I? Trading at 43.19, down $1.10, down 2.53%. Made this spike. I saw this the other day, WTW, spiking up, and then I kind of forgot about it. But as it was spiking, I said, keep your eye on this, because everything about it, the stochastic, the MACD, and the daily all said this should be going down. The weekly said this should be going down, and the monthly was at a peak B. And then suddenly it spikes up. Well, the following day, it just plunged to the downside, back to where it was before it spiked up. Then it had a green candle. Then it had a red candle, and today's a red candle down. I think this has got a real problem. So the question is, blow off top on the November the 7th. And my thinking here is that it was already coming down. Everything about it said technically, if you were short, you were correct technically. That's not to say that you're right, because if there's a news event like this, there's nothing you can do. But you were right if you held on, and the next day it came plunging back to just about where it was the day before. So that says to me that there's a real problem here. And at 43.10, if it takes out 40 support in the next week, be careful, because the 35s is the 200-period exponential moving average in the month. 35 is a 9-period moving average. 33 is the 200-period moving average. They just crossed positive, and often I look at that and I say, whoa, the moment they cross positive, it's already, because it's a lagging indicator, set of indicators. That's usually not such a good sign. So this is going to be something to watch. And what I would say right now is that I'm not sure what the news was, or it doesn't matter. But I think that at 43, you're looking at the 45s to 47s as major resistance. 43 is resistance. Sorry, 43 is where it's at. 45s is resistance. 46 to 46.50 will be major resistance if there is a rebound. I'm watching this real closely now. Yeah. So, okay, that will cover almost everything there. Oh, a couple of questions. There was a question that, Dan, would I look at, where did it go? Would I look at? Oh, KRE. KRE is the regional, where is that? The regional S&P Regional Spider, S&P Regional Bank in ETF. Um, I discussed this before. I said the character of the move up into the high that was made at 59.68 in March of this year, the candle that evolved and the next month's candle all suggested that there might be a new high, but that more likely I'm looking at a kind of a rectangle formation with a 56 to 57 area being very strong resistance. But if there is a close below 50 sneeze, if there is a close, there is a close below 52 at any point in the next week, we've got to look at the whole XLF and the KRE as being somewhat vulnerable. And that would again suggest that there's a chance that yields will come down in the shorter term. And if that's the case, remember my thinking here is that we're looking at a higher probability that if there is a market pullback and the Dow starts to trade in the 23,200s, so that's 240 points to go to the downside. But if it does start to trade any time in November, I think that bonds will actually rally and that yields will come down. Bonds rally, yields come down. Let me see if I've got my chart right there. There it is. So this chart right here shows you that last week was a really strong week. We didn't break to the upside. This is something that I think we need to keep in mind. You see, this is there's a flattening of the yield curve. I thought I'd have time over the weekend to just really go in depth into the whole idea of flattening. I know by words over the decades that I've looked at the market, when you get a flattening, you've got to be careful. But, you know, it's one of those 3 out of 5 times so resistant when it doesn't work. I'm looking at this and just saying the yields differential that I can see visually, I'm not doing this mathematically, between the 5 and the 10 is smaller than the difference between the 10 and the 30, 5 to 10 and 10 to 30. Obviously, you've got a much wider, you've got 5 to 10 is a double, 10 to 30 is a triple. But what I'm really looking at here is that within the context of the 3 yields, this is the weekly chart of I call it my triple yield chart that I show my subscribers. This is very important. So if yields break in the next 2 weeks, if the 30-year goes above 30 or 3, the 10-year goes above 24.75 and the 5-year goes above 20.89, we're looking at something very different. Then yields are going higher and bonds will go lower. And now we've got to look at the market in a slightly different context. I'm thinking here that this is chop, chop, chop in a sideways reaction and action phase. And what we need to see is a pullback below 30 years, 27.67. This pullback needs to come back underneath there, and then I think the market starts to pull back even deeper. Yields and the market will go together. Bonds will go higher if that's the case. Now, a couple of things I want to look at here. I wanted to show you, I'm having a webinar a week from tonight. I've been working on it. How can I put it? I'm trying to work on it as esoterically as I can. In other words, I'm trying to come to it from ways that I sometimes talk, but I never really discuss in detail. I'm going to discuss it in more detail in this particular phase. I'm going to be discussing mustaches. I'm going to be discussing automobiles. Tom mentioned this morning, Volvo has a flying automobile. They've been around for a while, been in production for a while. I'm going to be discussing that in terms of automation. I'm going to be discussing 2018. Can there be another huge move like this in the semis and the high-tech area and the tech area generally after such a huge move? Or does it need time to kind of recoup and build momentum? And will that be one of the final really big moves to the upside? Will there be a worldwide stock market rally? These are on November the 20th. That is Monday a week, 5 o'clock to 6:30. I'll be discussing this. It's a subscriber-only event, but you can join if you sign up for my newsletter for a free trial. You can be a participant. I think it's going to be worth it. And we're discussing the financials. I'm going to be discussing the different tech sectors. I'm going to be discussing the Qs. I'm discussing the divergence between the New York Stock Exchange right now, negative, to what's happening in the QQQs. These things usually do get resolved. So it's a lot going on. What can we anticipate for 2018? And then 2 weeks later, I'm going to be doing a live all-day session based on the Chapman Wave methodology. You go to the front page of TFN and check it out. Dow's up 17, S&P's up 1. I'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, folks. Last segment we're back for, and you've got Steve Rhodes coming up. Don't forget Steve Rhodes, great show. Dave White, another great show. Tom O'Brien talking about the day's wrap-up, as well as all these different aspects, as well as gold and everything else. A lot of information. Look at the VIX chart. The question was, what is the lowest VIX reading on record? On record, I don't know. I've got it going back to 1990. I used to, I think the VXO goes back further. VXO, that's the Dow. the VXO.X. Yeah, let me just double check on that. Yeah, that goes all the way back to 1986, where the low was 16.01, and we've been down to 8.86. I don't want to do it visually, but I'll have an answer tomorrow on the VXO. Remember, this is the one that in 1987 went to, look at that. Oh, I remember that go well. October the 19th of 1987, the VIX went to 172.79. So, I used to have this notated as well. All right, well, I'll have to renotate that one. Yeah, anyway, so we'll see what happens. The most recent one is a low of 6.32. Oh, no, there's another one. That's the low of 6.32. That's it. November the 28th, July, the week of the 28th. Okay, so here we go. The Dow is now up 18. There is constant buying. It's not, how can I put it? Let's make it real easy. The Dow is at 23,441, up 19. If by the end of the day, instead of just being wishy-washy and then starting to pull back next day, Tuesday and Wednesday, there is a punch above the high that was made on the 9th at 23,516. If there is a push to the 23,530s anytime this week, I have to respect that as really good strength. At this particular point, I think the technicals are very weak. I think it's going to be lower lows and lower highs. I accounted for a balance today, but the day's young. We'll see what happens. So thanks for being here, and stay tuned for great hosts, and check out my opening call. I think you'll find it.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.